Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody guys, so let's take a look again on euro currency. So you can see that the Jerome Powell totally crushed the forex markets by actually repeating the same mantras about we should be patient, we should do nothing, wait when the inflation hits 2%, when the economy returns back to growth. But as investors currently it's a bit worried about rising of the interest rates, and they are waiting at least for some minor hints and comments, acknowledgement that Fed is a bit concerned about rising rates and so on, but nothing was sounding recently. And that has pushed the interest rates to the new top. It's back above 1.5%. I'm talking about the 10-year yield. Since yield has jumped, its demand for currency of this yield has also jumped, and dollar has increased in value, because that is well-known correlation. That's when the interest in some currency is rising, the attractiveness of investing in this currency is also rising, and it triggers demand for the currency. That's the reason why yesterday you could see that market euro currency was not able to stay on the levels that we have mentioned. Actually, everything was relatively more or less good until the Jerome Powell statement started. So once he started to speak and repeating the same statement, market collapsed. So you can see the same situation on the stock market. It's also rising bonds, interest rates and inflation pressure is growing. You can see that's also pressed on the stock market, especially on American markets. So what we could expect currently? So currently we have to forget about the butterfly that we discussed yesterday. First of all, technically you could see market create the new lows, and that's why even theoretically we do not have the butterfly. Second, we have acceleration here right back down, especially yesterday's significant type of action. And that, well, makes more probable the direct action returning back to idea on the weekly chart. So we consider this as one of the possible scenarios that if market will not be able to stay above the previous top, around 119.50, 120 even, so the previous top, and start dropping below, taking out of these lows. Next, our scenario will be based on the potential ABCD. So this it is not cancel the idea of the possible another upward action here and drop on the dollar index, but probably it will happen later and in different circumstances. So currently maybe reaction at this level and kind of the gutless cheapo to buy that we will get here, just to put the background for a possible upward action. We will see. But in the short-term perspective for this week and next week, we probably will be focused to the downside action, reaching of the major support. Because as you know, on the weekly chart, 1887, 119 area, this is confidence, and this will be confidence and agreement with this ABCD patch, and also probably this will be daily oversold. So that will be the next level to watch for if you would like to buy. Additionally, you could see that extension of the BCLX 127 also stands in this area. So if you treat it as a butterfly, here is steep butterfly into the charts. Well, this also will be another extension that stands in the same area. So that's what about taking a new long position. I think that until market will reach this area, we hardly will get something better. Well, theoretical chances exist. So today we will get non-farm payrolls release, but to return everything back to its own and reestablish the status quo, market will have to show, or better to say statistics will have to show really poor numbers and the drop in the hourly earnings inflation. So if we will see really very low inflation in the wages, and we will get negative and bad numbers, significantly worse than expected in the payrolls, in this case we could see some kind of the return. Come back of the euro, but well, how long it will be and how strong, whether it will be something really outstanding or it will be just minor pullback, it's difficult to say currently. But bad numbers today suggest some pullback here. Numbers around the expectation or embedded in expectation will push euro lower and will proceed downside action. So currently, I wouldn't consider taking any long position by far. For taking the short position, theoretically it is possible, but as market stands currently at oversold, well, at least theoretically, by probabilities, we need to wait for some pullback, some retracement maybe. On the follow time frame chart, we have another ABCD pattern, minor patterns. Market stands currently at the COP, right around current lows. So I don't know what reaction will happen here, because everything mostly will depend on the non-farm payrolls numbers. This COP is just minor reason for any action in the market, because first of all, this is intraday chart, second is just a COP, it's not even the OP. OP currently would not take any consideration because it stands 1860 below the major support on the daily chart and below the major ABCD target. So that's why we have it, but well, currently it's not as important. Speaking on rest, yes, the price action, you can see how it has happened. You guys, actually, here was our SFIP support. We have started day right here. We said it should be some minor continuation hitting the COP completion, the butterfly. That has happened. Then market has started some reaction. That's the moment when the Jerome Powell starts to speak. So it definitely you could see on the chart that the reason for that was comments from the Fed. So that's currently what we have on the euro currency. So it means that we're turning to the new scenario, with the immediate upward action has been destroyed by the comments. So let's see what the non-farm payrolls will bring us.